Hello, my name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I will stop looking at my daily charts and instead concentrate on the longer term view, using my monthly, even yearly charts to commentate on a market. If you would like to discuss any of these, I'll only too happy to hear from you. So let me now introduce today's longer term chart. Today I'll be looking longer term at UK feed wheat. This continues to be one of my favourite, if not the favourite, long-term chart. Why? Well, I have no other chart that has a 1975 to date uptrend. That's currently at 65.30. An uptrend that is still valid. Just love that. I could also lather this long-term chart in long-term patterns, but I won't because it will obscure what's really been going on over the last few years. So we'll start with how this market in 2021 dipped from its May 2021 high, making a bull hammer pattern in July that saw support from both the 2 and 3 year moving averages, currently 229.85 and 221.05 respectively. Plus, the market's approach to the 5 year moving average, currently 197.15. I suspect that all but the 5 year moving average eroded the decline, and it was the 5 year moving average that gave the boost back up. Prices reached a short-term high in November 2021, which at the time seemed extreme. It was an all-time high back then, but it was the bullish closing long white Mariposa in February of 2022, and then the subsequent and substantial gap higher up to the March 2022 high that really set the market on its way higher. However, such a steep rise peaked out in May 2022 for combined key reversal down, bearish engulfing pattern, and bearish opening long black Mariposa. Those 3 months, February, March and May 2022, are really interesting as they broke up through the top of what's suspected may have been the big core pattern here that was running the market, which last year I considered retiring. It is a huge 2007 to 2022 ascending expanding wedge pattern, currently 111.40 to 307 3/4, which is highlighted in dark blue on my daily chart, on my long-term monthly chart. The 2 monthly closes above it, despite the strong bearish pattern of the 3rd month, well, they seemed last year to have caused irreparable damage that I then did not think might be recoverable. However, I have tempered this view for now, and I'll again keep it on this monthly chart for another year, though I am fully prepared to retire it. Anyway, since May 2022, prices have fallen, if in a juddering fashion. Interestingly, they peaked in October 2022, just under what was the broken upper trend line of the ascending expanding wedge pattern. It is this juddering fall that I wish to discuss now. See, this action created a very thin, tall, narrow head and shoulders top formed over 2021 to 2022. Last year I drew an optimized neckline highlighted in bright red. I was very suspicious about this super steep head and shoulders neckline last year, and I quote, "It is really too steep, and I suspect that any real use, this may be chasing shadows here, but it's still there to look at," end of quote. Nevertheless, I added, and I quote, "Thus, as prices are well below, it may be opportune to lay out some potential targets below for this pattern, should it turn out to be a topping action and not a continuation pattern. Thus a primary target X2 would be in the 193 zone, whilst a much harder it seems, target X3 would be in the 143 zone. The primary target may seem possible, but the secondary target, well, that is a ginormous task, and one I will acknowledge because that's what it shows," end of quote. I waited to see what 2023 would bring to this pattern. By the end of March last year, prices had achieved target X2 down at 193. The decline continued throughout late spring 2023, but ran into an interesting roadblock after breaching the 50% absolute Fibonacci line at 180.65. The halt and turn back up was caused by the hammer pattern low seen back in July 2021 at what is now the quite interesting 61.8% Fibonacci line of the big, yes, that big 1975 to 2022 move at 165.95. This ultra long-term Fibonacci support turned prices back up over last summer, but only effectively as far as the 50% Fibonacci line for the same move at 203.25 on the closing basis. Though you could argue the next 50% Fibonacci overhead of the 2002 to 2022 move at 208.90 also helped cap prices on the closing basis as well. Since then, the market has been eroded by a slowly rising 5-year moving average overhead, currently at 197 though the 50% absolute Fibonacci has held up the market from August 2023 until the end of the year. This January we have seen prices fall towards the 61.8% Fibonacci line at 165.95 once again, and has brought up a new idea for another pattern. So, if we look at the action since August 2020 to date, there is the distinct possibility of a larger than the earlier 2021 to 2022 acutely slanted head and shoulder top, a larger pattern in the offing. The first shoulder was made between August 2020 to July 2021. The head, with a crown on it, if you will, of the slanted head and shoulders top. The bigger head is between July 2021 to July 2023, and we are currently forming the second shoulder of this large head and shoulders top pattern between July 2023 to date. Now, as we have not fully formed this head and shoulders top, I cannot give ideas on the move, though I will ask you to keep a close eye on the neckline for this pattern, highlighted in purple and fairly flat, currently at 165.25. There's one final thing I'd like to discuss, and this is a holdover from last year's commentary. I said back then that it was simply about gaps, You see, and I quote, "We have a huge changeover gap back in early 2022. That is obvious. But we also have a small gap, 242.60 to 244.25 at the end of last year. That's actually the end of 2022. The earlier big gap we can see has been filled. The small gap is still open. They do not align, but even so, one could look at the action from March 2022 to November 22 as a possible derivation of an island top. Now, some may see I am stretching the point, which I am, but that is what I want to see, or that's why I want to see all the options and opportunities out there. This is not a classic island, but if it were, then a primary potential target X4 on the downside would be in the 171.90 zone, and a secondary very much harder to reach target X5 would be in the 127.5 zone. In some ways, this last point and these last two numbers are pure conjecture, but I think I'll leave you with those thoughts for now." End of quote. As you can see from the action since the end of 2022, the primary target X4 was achieved back in May last year, but the harder to reach target X5 is still alive. I imagine if the big 2020 to date head and shoulders top pattern comes about, well, maybe only a matter of time before we see an attempt down to target X5. Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final bit.